Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last two videos I have completed the theoretical part of the chapter Valuation of Goodwill. I have explained you the meaning of the term goodwill, definition, features, and what is the need of calculating goodwill, what are the factors to be considered for calculating goodwill, and what are the methods of calculating goodwill. The problems are based on the theory. So my suggestion to the readers, to the viewers, don't jump to the problems. First be clear about the concept, about the methods, then only you should watch the problems. It will be helpful. Otherwise, without understanding the theory, it is a waste of watching the problems. So my session, if you have not watched, go to the playlist of my channel, select the subject Advanced Accounting 2023. Watch the videos, first two videos, be perfect, then you come to this problem. So in this problem, short answer questions I'm going to explain. The first 5 problems I'm going to explain in this video. So before watching the video, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready and take the screenshot of the points which are written on the board. Then I'll explain every problem in detail. Now, see the first problem. The first problem, A, B and C are partners, sharing profits and losses in the ratio of 2/5, 2/5, 1/5. This is the profit sharing ratio, 2:2:1 respectively. It was provided in the partnership agreement that in the event of the death or retirement of a partner, goodwill should be calculated on the basis of 3 years purchase of the average net profit for the preceding 5 years. B retired on 31st December 2005. Calculate the amount of goodwill due to B. And net profit for the previous 5 years were as follows: 2001, 32,000, 2002, 38,000, 2003, 40,000, 2004, 29,000, and 2005, 41,000. So in this problem, we have to calculate how much is the goodwill due to the retiring partner B. So in the partnership agreement, it is given that whenever a partner retires, goodwill will be calculated on the basis of 3 years purchase of the average profit of the preceding 5 years. So what we have to calculate? Calculate the average profit of the past 5 years. To that average profit, multiply by number of years of purchase. Number of years of purchase are 3. That's it. It's very easy. It's very simple. Now see, calculating the value of goodwill by average profit method. 2 columns, year and profit. In the problem, years are given 2001, 2, 3, 4, 5, 5 years. And the profits are given 32,000, 38,000, 40,000, 29 and 41. The total profit of the 5 years are 1,80,000. This is the total profit. Now we need the simple average. So average profit is 1,80,000 divided by 5 years. So it comes to 36,000. 36,000 is the average profit. So goodwill is equal to average profit into number of years of purchase. In the problem it is given 3 years. So 36,000 into 3 is 1,08,000. So 1,08,000 is the value of goodwill of the firm. Now we are required to find out what is the share of goodwill of the retiring partner B. So what is the profit sharing ratio of retiring partner? It is given in the first line, 2/5, 2/5, 1/5. So 2/5 is for A and 2/5 is for B. The B's share of profit is 2/5. Now B's share of goodwill is equal to 1,08,000 into 2/5. You'll get 43,200. That is the share of goodwill of the retiring partner B. That's it. First problem completed. Now, second problem. Pravek Limited agrees to purchase the business carried on by Rohan Limited. So, Pravek Limited wants to purchase the business of Rohan Limited. Goodwill for this purpose is agreed to be valued at 3 years purchase of the weighted average profit. In the previous problem, we have taken the simple average. But here specifically, it is asking you to calculate weighted average profit for the previous 5 years. The weights to be used are first year 1, second year 2, third year 3, fourth year 4, fifth year 5. Profits for the 5 years are first year 30,000, second year 36, third year 45,000, fourth year 49 and fifth year 52,000. So all the 5 years profit. What is the difference between the previous problem and this problem? In this problem specifically, it is asking you to apply weighted average profit. So calculation of goodwill according to weighted average profit. So how to calculate weighted average? First column, year column, 1, 2, 3, 4, 5. And the profits are given 30, 36, 45, 30, 49 and 52,000. And the weights are also given in the problem. First year 1, second year 2, third year 3, fourth year 4, fifth year 5. Now we need the weighted profit. Multiply the profit with the weight. 30,000 into 1, 30,000. 36,000 into 2, 72,000. 45,000 into 3, 135,000. 49,000 into 4, 196,000. 52,000 into 5, 260,000. Then the total of the weighted profit is 6,93,000 or 693,000. This will be divided by the total of weights. Total of weights are 15. The weighted average profit, total of weighted profit divided by total of weights. Total weighted profit is 6,93,000. Total of weight is 15. So you will get 46,200 is the weighted average profit. Now goodwill is equal to weighted average profit into number of years of purchase. In the problem it is given number of years of purchase as 3. Here it is given. Goodwill for this purpose is agreed to be valued at 3 years purchase of the weighted average profit. 3 years purchase. The number of years 3. So 46,000 into 3, 1,38,600. This is the value of goodwill of the firm. The two problems I have completed. First problem simple average, second problem weighted average. Now problem number 3. On the basis of the following, you are required to calculate capital employed and average capital employed. So for calculating goodwill by super profit method, we need to calculate capital employed and average capital employed. So in this problem, we are not calculating goodwill. We are calculating only capital employed and average capital. So here balance sheet is given. Share capital, reserves, profit for the current year, depreciation fund, machinery 40,000, building 10,000. 8% debentures, sundry creditors. Now asset side goodwill, building, machinery, current assets. That's all. Previous theory video I have explained you how to calculate capital employed. Take all the assets but don't take any goodwill. So here goodwill is given on the asset side. Don't consider goodwill. Take other than goodwill. What are the assets here? Building is there, machinery is there, current assets is there. These 3 assets. But on building or machinery, there is a provision for depreciation. Deduct the depreciation. We need the book value or carrying value. See here, calculation of capital employed and average capital employed assets. Building value is given 1,75,000, but on building there is a depreciation of 10,000. On the liability side, provision for depreciation is given. So deduct 175 minus 10, 165. Machinery asset side it is given 1,40,000. That is the cost. And whereas accumulated depreciation is given on the liability side is how much? 40,000. So deduct cost of the building minus depreciation of building, then 1 lakh rupees the book value, right? Now current assets as it is, whatever is given in the problem, 3,10,000, same 3,10,000. The total of the assets 5,75,000 total of assets minus outside liabilities. In our problem, outside liabilities are only 2, that is debentures and sundry creditors. So debentures are 1 lakh, sundry creditors 30,000. Total outside liability are 1,30,000. So assets minus liabilities will get capital employed at the end of the year, 4,45,000. So we are also it is also asked to calculate the average capital employed. So take the capital employed at the end of the year minus half of the profit earned during the year. So on the liability side, you can see profit for the current year is 50,000. Half of 50,000 is 25,000. So deduct 25,000, 4,20,000 is the average capital employed. So in this problem, we have calculated capital employed as well as average capital employed. So 3 problems completed. Now 4th problem. On the basis of the following balance sheet and subjoined information, ascertain the capital employed in the business, just like the previous problem. Here balance sheet goodwill. Don't consider goodwill for calculating capital employed, right? Then premises at cost, machinery at cost, vehicle at cost, stock, debtors. Next page it is given investments for the replacement of machines. Actually, if it is a non-trade investment, we should not take, like government securities. We should not take. But here it is given investment is for replacement of machines. It's a trade investment. So we must take into account. Then bank balance will take. Preliminary expenses is given on the asset side. It's a fictitious asset. We should not consider. So while taking the assets, you should never take goodwill. Don't take preliminary expenses because it is a fictitious asset. And investment, if it is a non-trade investment, we should not take. But here it is a trade investment, investment for replacement of machine, we should take, right? Liabilities, 8% preferential capital, 1 lakh equity shares, reserves, profit for the current year. These are not outside liability. Then 6% debentures, this is an outside liability. Secured loan, liability. Sundry creditor, outside liability. Provision for taxation, that is also an outside liability. So these 4 liabilities we should deduct. Apart from that, subjoined information is given. The present value of premises is 6 lakh. When present value is given, we should not take the book value. In the balance sheet, premises at cost 2 lakh. Don't take 2 lakh. The new value, present value 6 lakh we should take. Similarly, machine 12 lakh. So we should not take the balance sheet value of machinery. We should take the present value of machinery 12 lakh. Investment 7 lakh 50,000. In the balance sheet it is given 8 lakh. Don't take 8 lakh. Present value 7 lakh 50,000 we should take. If present value is not given, then we can take the book value. Then stock to be valued at book value. Sundry debtors are bad to the extent of 10%. So out of the total sundry debtors, some are irrecoverable debts, bad debts. So deduct 10% of debtors. And vehicle is valued 14,000. This is the present value of vehicle. Don't take the balance sheet value. So whatever present values are given, that only we should take. If no present value is given, then we can take the book value. That's it. So calculation of capital employed, 4th problem. Assets, premises 6 lakh. The present value we have taken. Machinery 12 lakh, present value. Vehicle 14,000. Stock, it is given in the adjustment that stock consists of book value only. So whatever balance sheet value is given, the same balance sheet value, 14,000. Sundry debtors are 2 lakh given in the balance sheet. But in adjustment it is given that 10% are bad debts. So 2 lakh into 10% is 20,000. So 2 lakh minus 20,000, you will get 1 lakh 80,000. Investments, because it is trade investment, that's why we are taking 7 lakh 50,000. Bank balance as usual, whatever is given, the same thing. The total of the assets are 34 lakh 55,000. From this total assets, subtract the outside liabilities. 4 outside liabilities are there. Debentures, secured loans, sundry creditors, and provision for taxation. So whatever balance sheet values are there, same balance sheet values I have taken. Debentures, secured loans, creditors, provision for taxation. Total 14 lakh. So subtract 34 lakh 55,000 assets minus 14 lakh liabilities. So capital employed 20 lakh 55,000. In the problem, it is only asking you to calculate capital employed. So our answer is ended here itself. But for our knowledge, we can also calculate the average capital employed. Take the closing capital employed minus half of the profit earned during the year. Then we'll get the average capital employed. So closing capital employed 20 lakh 55,000. From this, subtract half of the profit earned during the year. That is given on the liability side. You can see profit for the current year 5 lakh 66,000. So half of 5 lakh 66,000, 283. subtract, we'll get 17,72,000 as the average capital employed. That's it. So totally 4 problems I have explained. Now come to the 5th problem. From the following info particulars, compute the value of goodwill on the basis of 3 years purchase of super profits, taking the average of the last 4 years. First time we are going to calculate the goodwill by following the method of super profit. In the last video, theory video, I have explained you what is the procedure of calculating goodwill as per super profit method. Now carefully you see, capital invested or capital employed means one and the same. So directly given capital employed 10 lakh. Now market rate of interest 12% and rate of risk return is 4%. Actually we need the normal rate of return. So normal rate of return is market rate of interest plus rate of risk. Rate of risk return. So we combine 12% plus 4%, 16% is the NRR, normal rate of return. Trading results are 2007, 3 lakh, 2008, 350, 2009, 4 lakh, 2010, 5 lakh 50,000. So if you closely watch these figures, we can come to the conclusion the profit is in increasing trend. 3 lakh, 350, then 4 lakh, 450, 550. So whenever the profits are showing an increasing trend, we should calculate the weighted average profit, not simple average. If the profits are fluctuating, we can calculate simple average. But when the profits are showing an increasing trend, better to calculate weighted average. Right? Now here, value of goodwill as per super profit method. Normal rate of return NRR. So market rate of interest plus rate of risk return, that is 12 plus 4, 16% is the NRR, normal rate of return. Now capital employed is 10 lakh, capital invested or capital employed 10 lakh. Normal profit is capital employed into NRR. So capital employed is given in the problem 10 lakh and NRR is 16%. So 10 lakh into 16 by 100, you will get 1,60,000. What is this 1,60,000? Normal profit. Now we need the FMP. Future maintainable profit is the past average profit adjusted for future changes. If there are any future changes, we have to adjust the future changes to the past average profit. But in our problem, no future changes are given. So whatever is the past average profit, that itself will be the FMP, future maintainable profit. And the profits are showing increasing trend, so we calculate weighted average profit. So here, past average profit adjusted for future changes. No future changes, so we simply calculate the past average profit. The profits are showing an increasing trend, so better we calculate the weighted average profit. Already in the previous problem we have done weighted average. First year 2007, 8, 9, 10. The profits are given 3 lakh, 3,50,000, 4 lakh, 4 lakh, 5 lakh 50,000. Then the weights. Weights are not given in the problem. We assign the weights. The highest weight should be given to the last year, latest year. The latest year is 2010. So we give the weight as 4. So we'll give the weight 1, 2, 3, 4. Highest weight will be given to the latest year, last year. Right? Now multiply 3 lakh into 1, 3 lakh. 3 lakh 50,000 into 2, 7 lakh. 4 lakh into 3, 120. 12 lakh. 5 lakh 50,000 into 4, 22 lakhs. Take the total of the weighted profits. The weighted profits are 44 lakh and the total of the weights 10. The weighted average profit is equal to weighted profit divided by total of weights. The total of weighted profit 44 lakh and total of weights 10. So 44 lakh by 10, 4,40,000 is the weighted average profit, and that itself will be the FMP, future maintainable profit. Now super profit. Super profit means the difference between the future maintainable profit and the normal profit. Simply SP SP is equal to FMP minus NP. So FMP we got 4,40,000 and NP normal profit we got 1,60,000. So 440 minus 160 you will get 2,80,000 is called the super profit. Now goodwill is equal to super profit into number of years of purchase. So in the problem it is given how many years of purchase? Compute the value of goodwill on the basis of 3 years purchase of super profit. It is given in the problem. So whatever super profit we got, multiply by 3. So 2,80,000 into 3, you will get 8,40,000. That is the value of goodwill according to super profit method. So in this video, 5 problems I have explained. These are the basic problems on the valuation of goodwill. So if you want the perfect knowledge, watch the video once, twice, and always keep a notebook, calculator, pen ready. So whenever I explain some important points, make a note of it. Then only you can be able to remember till examination. You will not forget the points. You can enjoy learning. So have some patience. Watch the video twice, thrice. Definitely you will get a good comment on the subject as well as on the topic of valuation of goodwill. So inshallah we'll continue the next problem in the next video. So if you are satisfied, give a like to the video, share my channel among your friends, among your group, so that more students can watch the video and enhance their knowledge. Give your comments, subscribe my channel if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah we will continue the next problem in the next video.